right. 1 second. My camera is not working. Let me see. There it is. There it is. There it is. All right. Good morning. Good evening. Good afternoon. How's everyone doing? Can everyone see me? Can everyone hear me? Hello, 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 hello. Let's see. Let's see. How's everyone doing? I can speak a little bit of Turkish, my friend, so don't think you're going to get away with that. Let's see. Perfect. Thank you, Eckhart. Thank you for letting me know. Hello, Milan. Hello, DK. Hello, hello, hello. I'm in your MT and learning a lot so far. Perfect, David. And please let us know as well if you have any questions, of course. Feel free to let us know. Hello, hello. Hello, Trade Extra. How's everyone doing? Hello, Tony. I'm doing good. Thank you. Thank you. How are you, sir? Hello, Sanjeet. Hello, Abbas Fakar. Hello, hello. All right. Let's see. Let's see. Let's see. Let's see. Thank you. Thank you, Mustafa. Thank you. Thank you. Thank you. Thank you. Hello, Gecko. Tony. I already said Tony. Hello, Percy. How are you doing? Always lovely to see Percy. Very active in the Discord as well. Great to see. Which football team do you support? Not necessarily. I'm usually a supporter of the Dutch people. So anywhere where the Dutch people are, that's the teams I support. I saw one question that I found quite interesting, by the way. How do you control your emotions when in a trade? It's a good question. And it's a question that I do want to answer as well. It's, first of all, trading, I believe, is when people say you shouldn't have emotions when in trading. That's, of course, just a load of bollocks because you're human. So you're going to have emotions sooner or later when in trades. For example, I got nervous when I'm in a trade. I also feel a little bit more down when I lose a trade. I feel a little bit more up when I win a trade. Completely normal when you're human. And I think everyone here is a human. So emotions are, first of all, completely normal. So I believe it comes a lot down to emotional intelligence. So how good can you control your emotions? And before I dive into how you can actually do that, is first of all, I like to use an analogy. If, for example, we get into an argument, we get into somewhat of a fight, then emotional intelligence is, for example, if I get angry, I notice I'm angry, but I don't start fighting with you. So I don't actually, doesn't turn into a fist fight, if that makes sense. It's very similar in trading, where you can have emotions, but you need to be conscious of the fact that you are having emotions, so that they are coming up, etc., etc. So can you then be aware of the emotion? That's already the first step, because a lot of people, they are not even aware that they have emotions. So what happens is they get led by the emotions itself. So being aware of your emotions, and what you can do is recording yourself during trades helps a lot. Also writing down exactly what you feel at that moment in time helps a lot. Again, from my experience, if I record and I'm in a trade, I'm most likely not going to tell myself, hey, I'm now going to overtrade, or I'm losing control of my emotions, etc., etc. So recording yourself, no matter how it is, it helps a lot, in my opinion, as well. Let's see. Perfect, Max. Perfect. Nice. Let's see. Harry, which broker or app would you prefer to take a real trade / invest? Do your own research as well. I would highly advise. But IC Markets is, from my personal experience, a good one. And also Interactive Brokers is also a good one from my personal experience. Let's see. Yes, I got a trade last week. But it was a loss, actually. Well, it's very funny because on TradingView, it was a winner, but on my broker itself, it was a loss, unfortunately. But it is what it is. Let's see. After watching a lot of your videos, I can see how easy it is to get the market direction wrong. That's true, Sam. True. Hello, Andrea. Hello. How are you doing, sir? How are you doing? All right. So first of all, again, I just wanted to dive into the forecast, of course. What do you do when you are confused with your daily bias? It's a good question. And a lot of people, I think there's also to a certain degree, you need to accept the fact that the market is telling you something if the bias is not clear. Because that simply tells you that it's low probability. That if you can't get to a clear bias, that should tell you, hey, there is no clear bias at that moment in time. So I think a lot of traders make a mistake of trying to think there always needs to be a clear bias at every single moment in time. No, it's not what trading is about. Trading is about finding those moments when the bias is clear so you can capitalize on it. That's high probability, if that makes sense. So that is very important. Thank you for warning me, Max. Thank you. Thank you. Good day, Hills. Good day. Good day. How are you doing? All right. Can you be a flow trader with EU or GU? Yeah, for sure. 100%. 100%. All right. I wanted to dive into the forecast, of course. Afterwards, I have a question mark right here. Again, feel free to let me know any questions that we can go over as well. And then we can go over it later on. So feel free to suggest right now anything that you want me to go over. Let me know. My last trade recap, of course. See. Trade. Recap. Trade recap. Okay. Hello, Hassan. How are you doing, sir? Same as you are for me. For trading view, my broke chart is different. Yeah, it's all right. It generally happens, especially I looked at futures and my broker is CFD, so it was very different, etc., etc. So that's your writing is better than mine. I doubt it. My writing is horrible. You know, I actually used to work at a place, and the people, the employees there that also worked there alongside me, my colleagues, they just couldn't understand my handwriting. It was very funny. Very funny. So it might be a little bit embarrassing. 50-50 area where we shouldn't trade. Okay. 50-50. All right. Let's see. Backtesting. I don't do backtesting, my friend. And we can talk about it. As to reasons why I don't do it. Highest probability setup. Okay. We can talk about 50-50. I think it's all nicely in alignment as well. If we talk about high probability. High probability right there as well, setup. The rest, we can also go over it. Feel free to let me know. And of course, we'll dive into any questions that you might have as well. First of all, let's start with the forecast. Afterwards, we'll dive into these things right here. Put it right there. All right, perfect. Let's see what we have. First, let me actually quickly, let's see where it is. There it is. Because we are going to also take a look, of course, at the economic calendar. All right, let's see what we have. So last week, an important week. And last week was an important week regarding interest rates throughout the whole week as well for the US, but also for the Eurozone, which had a lot of impact in the market as well, which really set the tone of the market. And it was quite a pivotal point, if we could name it that. Next week, it's arguably a little bit more calm right here. Still a very interesting week as well right here. The thing we have to take into account is, of course, that we have NFP right there on Friday. But for the rest, this week is looking arguably, all right, is looking quite interesting in my opinion. So if we do take a look at the market itself then what do we have? Where are we coming from? Etc. etc. So right here on the weekly time frame, we are coming into a fair value area. We're coming into a fair value gap. Again, showing the strength of two candle rejection. Why? Because the first candle is not a rejection. So what happens? We have a previous candle low sweep to then potentially continue higher. If that does not happen and two candle rejection is not in motion, then potentially we can continue lower instead. But what we see right here is very interesting price action. Because when we have this previous week low sweep, what actually happened? Well, we do have this daily fair value gap going against us as well, which we'll touch on. Then on the lower time frame, if we go into the 50-minute, the 1 hour, then we see we have this fair value area right here. This is a fair value area, which we can offer fair value to then potentially continue lower from it. We see that we offer that fair value and we try to push lower right here, fail to do so. Instead, we create what we know as in the MMT, this flip fair value area right there to potentially continue higher from. So what happens, we push higher, we create this large gap as well in price action right there to then retrace back into the daily fair value gap right there. A daily fair value gap has been reached ahead of FOMC. We struggle a little bit right here. And overall, we see that we really struggle to push lower from the daily fair value gap, which is good. Because right here, once we have this large down move right here, this aggressive down move, I saw a few people as well that were interested in shorts. In the MMT and even the public Discord, again, I mentioned right there, this is, to me, is most likely manipulation to still continue higher. And you can simply see the chat that I mentioned right there. So the reason why, because I was quite convinced on the bullish bias right here, because the daily fair value gap was not strong enough to push price lower at that moment in time. So what we see is the only thing stopping us from going higher was this 1 hour fair value gap right there. We slightly respected somewhat afterwards. We push price higher right there, having a clear bullish bias heading into next week potentially as well. But one thing, we have a bearish fair value gap sitting right there, which we can potentially have a sting into. This to me at this moment in time, whilst I'm saying this right now, is to me a bump in the road to continue higher. So it's resistance. So we open up, we might see a rejection from it overall, but I would still want to see higher prices right there. Now, it's very important to still monitor this weekly fair value gap, because if we do keep on respecting it, like we see right here, then of course, that changes a lot of things, and that changes the whole scenario right here. But ideally, we have the rejection early on in the week. We take out the rejection right there and then start running higher as well. That could be very interesting. And the dollar right here does clear up a whole lot, in my opinion. So quite interesting price action. Bullish prices right here. Let's see, after the weekly value gap, we also have this daily fair value gap right there as resistance as well. Very interesting price action, in my opinion. All right, on Russell, excuse me, and the indices in general, what are we seeing? We're seeing a lot of manipulation right here. Now, I want to take ES as an example for the indices right here, and also Nasdaq and YM. We are coming from an all-time high, which is always important to understand. You're never going to get a more clear bias than an all-time high. An all-time high is such a clear bias because even, and I need you to understand this very in depth. Oh, I think we touched on it in the, previous live session or the ones before it. Even if we are going to continue lower, we sometimes still need to be bullish because we need the liquidity to reach the liquidity to then continue lower from it. Otherwise, price sometimes can't move lower, if that makes sense. So in a case where we have a lot of highs right there at an all-time high, it's very likely that we are still going to reach the all-time high, even though we might get a few down movements right there, because we need the liquidity to then continue lower from it. It's a very similar example that we see on Bitcoin, for example. We still reach this all-time high. Why? Because even if we want to continue lower, we still need the liquidity to push lower from it. So on ES right here, that is important to understand. Where this first down movement that we had on that Monday, we mentioned this in the MT, that's manipulation, most likely. And we're simply likely going to continue higher. Now, we do have, again, an aggressive move lower right here this Friday. So what do? We need to understand this could, again, very well be manipulation to still continue higher. And that's my current stance that I have. That stance can change though. I'm open to reacting. I keep an open mind. So if we do create this 4-hour fair value gap right here, and we do respect it, and we create new fair value gaps from previous fair value gaps instead to continue lower, then throughout the week, I will be more bearish. But this 4-hour value gap, if we now have a similar scenario like we had at the beginning of last week or this week that we are in, this 4-hour value gap does not get respected right there. We then instead push higher. That to me shows that we have a perfect move to continue higher towards the all-time high right there. That's personally what I would prefer. But again, don't marry that bias that we should continue higher right there, because we might just continue lower as well. Keep an open mind in that. That's what I'm trying to say. NASDAQ, very similar right here. Also keep that open mind right here. YM, also very similar. I would still prefer the indices to be bullish, at least until we reach those all-time highs right there. DAX at an all-time high can simply also look to continue higher as well. So when the dollar right here does turn bullish and does become more interesting, which of the majors becomes interesting right here? Well, and what we have been emphasizing on as well in the live streams here on YouTube, it's important to understand then the strength and weakness story, right? And for all the people that use SMT, for example, you are trading essentially what we are trading, strength and weakness, but we are not paying attention to it. And that's not necessarily, it sounds like I'm trying to take a shot at those people. That's not it. But SMT as well, and what a lot of people do is they call SMT, but all you're doing is you're trading or finding the strongest or the weakest pair in the market, because that's the highest probability one. So if we compare Australian dollar, US dollar to, for example, an EU right here, we can actually, let's put it side by side to see this clearly. We have Australian dollar, US dollar, and we have EU on the right. What do we see? Which one would you say is weaker? So which one is better for shorts? The weaker pair is always better for shorts right there. Well, if we take a look at this, I would argue Australian dollar, US dollar. Why? Because Australian dollar, US dollar never created this bullish fair value gap that EU does have. This bullish fair value gap, but also this bullish fair value gap right there. And if we take a look at, for example, and we replace EU with GU right here, and look at the difference in weakness. So let's say the dollar now turns bearish and GU could all of a sudden continue higher. Then GBP US dollar would be very interesting to potentially buy right there if the dollar does turn bearish. But as long as the dollar is bullish right here, then Australian dollar US dollar is weaker and is more interesting for shorts. Why? Because GU has a lot of bullish fair value gaps. Well, actually one, that's exaggeration, but it doesn't even have the bearish fair value gap right there that we do have on EU. So we can put this in a ranking. AU at this moment in time is the weakest one if we want to look for shorts. So the most interesting one, arguably. Then afterwards we have EU. That's arguably a little bit in the middle. Still weak enough to also continue lower and potentially be interesting. GU right there is not interesting. Why? Because it's too strong to look for shorts at this moment in time. So AU, EU, and GU. 1, 2, 3 right there. Then we also have New Zealand dollar, US dollar, which is very similar to Australian dollar, US dollar, also quite weak overall. That story is important to understand because that allows you to trade as well, which we'll dive into deeper, that high probability trades, etc., etc. High probability trades do not necessarily, and what a lot of people think is they come to me with a question and they say, Ario, why does this entry fail? Or my entries is not good enough, etc., etc. Entries in general are not down to the entry itself. And what I mean by that, you can have a really bad entry, but if the higher time frame is still really good, then that entry will still play out. If your higher time frame is not good, then the best entry confirmation in the world, no matter what kind of entry confirmation you have, will still fail because a higher time frame is simply not good enough. It's not high probability enough, if that makes sense. So that is very important to understand as well. It all comes down to finding the high probability price action right there, which we'll dive into in a little bit as well. US dollar, Canadian dollar can simply continue higher. I don't necessarily like the price action because right there we see we're struggling a lot. It's just not nice price action to trade. The delivery, we are going higher, yes, but that's the first part as a trader. We also need nice delivery to actually push higher as well, which currently we are not necessarily having on US dollar, Canadian dollar. So for me, I would like to take a step back right there. US dollar CHF is looking a little bit better right here. We have overall an okay path to continue higher as well. 4 hour, nice order flow to push higher right here as well. Let's see if from this swing low right here, we can currently create new 4 hour value gaps to push higher from as well. Could be quite interesting. US dollar JPY, it's all right, but in general, I'm not a big fan at this moment in time of the JPY pairs. The JPY pairs, I mentioned this in previous live streams as well, not looking that great, not looking very interesting in my opinion. All right, gold, very for the third week in a row, arguably, gold, the highest probability instrument. And we'll dive into as well why that is the case. But it's beautiful price action here again on gold. And it's lovely. Now, I took a trade on gold last week as well. And what we're seeing is that we are currently reaching the all-time high right there. So we have reached the all-time high at this moment in time. Now, all-time highs for me are always a little bit scary territory. Reason why is because if you're looking for shorts, you're very likely to try to call a top in the market, which is never a good thing because then you're going overall against the overall trend. If you're looking for longs, it oftentimes feels like you're chasing price. So both those two extremes is something you need to watch out for, if that makes sense. So ideally, what you want to wait for is for a clear higher time frame retracement. For example, the daily fair value gap right there, daily nested fair value area, to then potentially push price higher again. But since we have reached an all-time high right there, and if we do create this retracement, then why are we creating this retracement? Because we are potentially sweeping an all-time high. So that, again, there's a lot of tricky factors, a lot of potentially this. That makes something 50-50, makes something very tricky, if that makes sense. So be careful with that as well. If you want to trade gold, I would say look at more confirmations. Never really a bad thing. Silver right here. So since gold has reached the all-time high right now, silver could be interesting because it has more targets to work with still. So right here we have, and you could say, so you always want to trade the stronger or the weaker pair or the instrument. Gold was stronger than silver, meaning that gold was more interesting for buys, for longs over the past few weeks. But since gold has now reached its major target, the all-time high right there, then gold essentially gets taken away. It's not that interesting anymore, in my opinion. So afterwards, you can potentially switch to silver right now to potentially trade it because silver has not reached those same targets that gold has right there. So silver, we do have this fair value area, fair value gap right there to potentially push higher from as well towards those next highs. That does look all right. Bitcoin. It's odd price action right here on Bitcoin. First of all, what we are seeing is, again, we are reaching that all-time high. That all-time high, we are simply sad currently respecting it. So this leads to a lot of 50-50 price action, very tricky price action. We had this bearish fair value gap, which we did not respect right there earlier this week. So potentially higher prices are quite interesting. High prices failed to follow through. So afterwards, what we see is now we are again continuing lower, again supporting the idea that we are indeed sweeping this all-time high. So if we do start to respect those bearish fair value gaps right there, we're arguably looking at unusual context to target this fair value area low on Bitcoin, and arguably, again, a bigger retracement right here on Bitcoin. So that's something to take into account as well. Now, I could be... Let's see. Okay, there it is. I got shocked for a moment that we do still continue higher as well right there. All right. But overall, at this moment in time, I would say Bitcoin does look a little bit more bearish than bullish short term right here. Crude oil, let's see what we have. Crude oil came back towards this weekly fair value area right there. Now, throughout the week, we have had a lot of momentum going against our trade ID. The problem on crude oil is that we never disrespect premium rates. So we keep on respecting arguably both discount rates and premium rates. We're disrespecting more the discount rates. So we never climb back above highs, etc., which is a problem because we never get the proper confirmation to continue higher. Here, in this price action, you could argue it might finally happen, but keep the expectations low right there. If it does happen, we have great liquidity right here waiting for us right there to be targeted. But let's see what we can do. I don't really want to put too much emphasis on crude oil right there because it has been struggling so much to follow through. So it's not that interesting in my opinion. Bank Nifty. What we saw on Bank Nifty is that we reached this low right there. Afterwards, we created unusual context to target this high right there. And also, what is that? It's the fair value area low on the weekly time frame right there, which we can at this moment in time, in my opinion, still continue lower from. If we do want to continue lower right here, then what we are currently seeing is it's okay. I would like to see new fair value gaps right here to follow through to actually confirm that we do want to continue lower. If we do not respect these fair value gaps right here, we do not sweep those highs and instead we run those highs right there, something like this, then instead I would start looking at bullish prices right here on Bank Nifty as well. Quite important to understand. All right, let's see what we have. Is there a Discord session? No, not for me at least. No. First of all, I want to go over my trade. Let's go over my trade right here. And then because these three things, arguably, they tie in together as well quite nicely. 50-50, the trade recap, 50-50, and high probability. Let me show it to you. Trade recap, 50-50, high probability. Let's see. My trade was on gold. So at the beginning of the week, and we mentioned as well, gold can simply continue higher. In the previous live stream here on YouTube as well, I mentioned it could arguably be from this fair value area that we have on the 4 hour right there. Now, what do we see? We saw very early on throughout the week that we did not respect that. Instead, what did we do? We created unusual context to target liquidity. So this is a whole topic for a separate video. But fair value areas, they tell you so extremely much because they tell you either if we are going to continue higher or continue lower. And both scenarios you can capitalize on. So what we have right here is we try to push higher with this price action, fail to do so. Instead, we create this bearish fair value gaps. What then happens is this turns into a flip fair value area. So that high gets respected right there. And this creates unusual context to target the fair value area low. If we're not offering fair value in the market, then we are targeting liquidity. The liquidity is oftentimes at the low of the fair value area. The last line of defense, which a lot of people tend to still trade from right there, first of all, becomes a target that we can trade towards once the overlapping defense fails. Take that in. Okay, then afterwards, what do we see? On the daily, we have no other area to continue higher from except for these swing lows right there. So it comes down to a liquidity standpoint where if there's no fair value to continue higher from, then usually it tends to be, okay, we're going to reach a swing low, we're going to reach liquidity, sweep the liquidity to then continue higher from it. On the 4 hour, we have right here this 4 hour value gap. So if we do want to continue lower, again, I always like to take a look at my trades from an opposite side. Meaning, if I want to see bullish prices, I'm going to force myself to try to understand why the market might be bearish. This way I keep an open mind. This way I'm never surprised if something happens, if that makes sense, because I always see something coming. So here, if we do want to continue lower, we will respect this 4 hour value gap to continue lower from it right there. It's the only area, arguably, to continue lower at this moment in time. Instead, what do? We fail to push lower from the 4 hour value gap. We again create unusual context right here, right there. So disrespecting the fair value area. To then push higher, we have this fair value area high right there as a target. Since we're not offering that fair value, we're now looking for liquidity. But not only that, this is in alignment with what? With the overall bias that we had, and that is the all-time high right there. And the all-time high, again, like I mentioned, all-time high, you're never going to get a more clear target because the all-time high is such a clear target, such an easy target to work with. So where was my entry? My entry is a stick entry, and a stick entry is not something that I share on YouTube. It's quite advanced overall. My entry was around there, and I covered those lows right there, and I targeted a 1 to 2 right there as well. So you might think, Aryo, that's beautiful. That's a beautiful trade right there. And you hit a take profit. Congratulations. This was a stop loss. And let me show you why it was a stop loss. This is the futures chart that we are looking at currently to give you an ID. And I execute mainly on CFD charts as well. So right here, if we go to my broker, for example, my trade was around there. My stop loss was at that spot. I got tagged out right there. It's painful. It's painful. I don't want to talk about it. No. It's all right. I got tagged out right there, and then it continued higher as well, which is a little bit of a shame. But again, I'm fine with living with that because previously on a previous trade that I took last week, so not this past week, but the last week, my broker actually saved me. So it's pick your poison essentially. I'm fine with that. So that was my trade ID right there. And eventually we did continue higher as well. It's relatable. It's unfortunate, but it is what it is. So how does trade recap right there? How does it time? Oh, I almost clicked the wrong button. How does it tie into 50-50 right there and also high probability? Because these, of course, are arguably the opposite. When you have 50-50 price action, we're talking about low probability. When we are having high probability, we're not talking about 50-50 price action. Now, what is 50-50 price action? And this is very important to understand because in my trading journey as well, I thought I was always doing something wrong. When I couldn't find a clear bias or I couldn't say the market is going to exactly do this, I thought I was doing something wrong. And I thought I'm just not good enough, essentially. That's what I thought. But that's not necessarily what trading is about. Trading is about finding when you are good enough. So finding the opportunities where you don't have any doubts, if that makes sense, where there's no 50-50. So what we see, for example, when we are respecting both a discount array and a premium array, at that moment in time, we are 50-50. We have a lot of examples throughout this week. So here, we have a potential sweep of this low, and we also have this fair value gap. This is why it's always a little bit more tricky to trade fair value gaps after we do reach a swing high or swing low. Why? Because we can also be sweeping this swing low to continue higher. And that makes it a little bit more tricky to overall trade that fair value gap. Again, trading against a sweep is always tricky. We see the same thing on Bitcoin. We see the same thing potentially happening on gold right here on the daily, for example, right there. We are potentially sweeping this, so we trade back into that fair value gap. So that makes it a little bit more tricky because now there's an opposite argument in the market. 50-50 price action and high probability, low probability all comes down to a few things. And that is essentially arguments and signs, as we call it. For example, if I turn on the indicator right here, you'll see currently the indicator says this is 50% bullish, which means it's more likely to consolidate. This means that there are just equally as much bullish arguments as bearish arguments at this moment in time, which makes something 50-50. It's quite objective. And again, the indicator is not something I would say this has the last saying. The human always has the last saying. It's quite important to understand. So when something is high probability, that means there's only arguments towards one side of the market. So why was this high probability, for example? Well, here at this moment in time, when we are respecting both this bearish value gap and this swing low, it's very 50-50. Now, once we take out the rejection high right there, we run the rejection high. What happens? This bearish value gap is now disrespected, meaning that argument is taken away. So we don't have that argument anymore. So at this moment in time, the only argument that we have is bullish arguments. So why is this then very high probability? Because we only have arguments to be made on one side of the market. Again, if you can make arguments for both sides of the market, then that means something is low probability. That simply means that you should stay out of the market. But if you can only find arguments towards one side of the market, that means something is very high probability and you might want to look to get involved right here, for example, on gold. We only had one argument and that was to continue higher at this moment in time. So then the question becomes, well, what are those arguments? That's the concepts that we are using. So that's how you can somewhat turn those concepts into an objective manner, because you can stack up the concepts and the arguments then to then understand if something is high probability or low probability. So a lot of it comes down to not necessarily how much of a genius are you when it comes to twisting the magic of concepts or something like that. A lot of it comes down to, do you have your stuff in order, and do you have the right process to understand if you can objectively find high probability or low probability conditions? That's a lot of it what it comes down to. Just simply being objective. It's not necessarily even subjective. So it's quite important to understand right there. That's something we really dive into in the MMT as well, because trading concepts, like I mentioned before, it's like an unorganized box. You need to organize them first of all, and then afterwards you need to always find the highest probability conditions. When you do that successfully, that's profitability essentially. So that's very important to understand. We can find another example on the dollar, for example. When the dollar reaches this weekly fair value gap and that fair value area right there, the first thing we might say is, well, we could potentially continue higher. So we could see higher prices right here, which is not wrong. You're not wrong, but nothing is confirmed in the market until it's actually confirmed, right? So what we see at this moment in time is that we, for example, have this daily fair value gap right there, which we can still push lower from. So this weekly fair value gap and fair value area is pushing against this daily fair value gap. So once we reach that daily fair value gap right there, that's 50-50. Why? Because at that moment in time, if we do want to continue lower, we can still continue lower from this daily fair value gap right there. So nothing is confirmed that we do want to continue higher just yet. Now, once we overtake, disrespect this bearish daily fair value gap right there, now we only have arguments to be made for the bullish side right there. So we are more likely to continue higher overall. So if we take a look, for example, at the MMT indicator, we see right there 78.4% bullish right there, which is mid probability overall. So this is more likely to continue higher right there. And that's probabilities. That's essentially it. That's how you find 50-50 areas, high probability areas, etc., etc. And again, I can't emphasize on this enough that a lot of times when I open the chart, a lot of times it's just waiting. And that's about it. It's not necessarily saying, okay, I need to know exactly every minute of my trading career, what is happening at that moment in time. A lot of times trading comes down to a lot of times waiting, because high probability conditions also, you need to understand, high probability conditions, they happen faster than low probability conditions. Think of why that is, because that why helps you a lot on your mindset. Because low probability conditions, and I'm generally speaking, because some might say their consolidations is high probability for them, but generally speaking, low probability means that we are consolidating right there. Now, consolidations are slow. They don't move anywhere. They stay in the same spot right there. They might take liquidity here and there, but overall they stay in a similar spot, like we see right here, for example. High probability condition. What is high probability conditions? It's when we move higher or lower fast right there. So from a logical standpoint, what happens faster? This move higher, which took 14 hours, or this consolidation right there, which took 2 days and 12 hours right there, to then have high probability conditions again, which only took, let me see, only took 1 day right there. That's important to understand, right? That you're going to be waiting more in trading than you are going to be doing something. And it oftentimes feels very counterintuitive, but that's trading. That's trading for you. Yes, for sure, Hassan. Your 2024 performance, for sure. You can reach out to the email. I have it ready there because I have it ready in a Notion. 2024 was okay for me. It was all right. I got used to a new trading plan. For example, I passed the first thing I did throughout the year was focus on passing FTMO challenge with a stick trading plan I currently trade. I did pass that. Eventually, I went into more performance and live trading as well. That makes sense. No worries, pets lovers. No worries. Have a question? Feel free to ask it, my friend. Thank you, Anil. Thank you. Thank you. Can you explain stick trading, or is that MMT only? It's something I discuss only in MMT specifically about the trading plan, but if you are only watching YouTube, I think you can also put 1 and 2 together, meaning that a lot of it is based on candle signs, and the reason why it's called a stick entry is because you're using candlesticks to entry. So, which on the lower time frame are, for example, fair value gaps. So when you understand that correlation right there, you can also allow yourself to understand what individual candles right here are doing. So what someone, for example, Franco, I'm not sure if you're here, but he goes into this quite in depth in the MMT itself. And this is essentially what it comes down to is if you understand what fair value gaps are doing right here on the lower time frame, then you can understand singular candles. That's candle signs essentially. So when we take a look at this price action just purely based on daily candles, you can understand when it's high probability, when it's good to trade, or when it's not good to trade. And understand the direction of the market just purely based on singular candles, if that makes sense. And that's what stick trading essentially then comes down to. Hello, my friend. Always a pleasure spending my evenings here. Love to hear that, trader law. Love to hear it. Thank you. Is trading consolidation the same as seek and destroy? Yes, correct. And please, what are the kill zone of gold? Thank you. Do you trade macro time? No, we don't use macro times. Kill zone of gold. it's very similar to just Forex and a little bit of combination of indices. So for example, if we compare EU to gold, you're going to have very similar kill zones in terms of London, New York session, but the volatility for gold carries on a little bit longer than, for example, EU. So the indices right there, and I would say the cutoff time is really somewhere around 2 p.m. That's what you want to avoid right there. That makes sense. Backtesting, why not? Good question. So again, I have quite a radical opinion on that, and you might agree with it or not, and that's perfectly fine, of course. Just from my experience and from what I see in students and successful people when it comes to trading in general, is backtesting did not help them to get them there, to get them to the point. And let me explain that clearly as well. Hindsight backtesting, so a lot what I do in videos, etc., is great in my opinion. Why? Because for someone who is new, you just need to get your eyes trained. Meaning you just need to train your eyes right there to see what we are actually talking about. Then the next step is to apply that in live trading. Immediately. It's quite a big step, yes. But if you are using replay backtesting right there, you are doing yourself not a favor. And the reason why I say that is because backtesting right here, and a lot of people, a lot of problems, a lot of bad habits that people carry on to their live trading stems from replay backtesting. For example, if I take a loss right here, I look at this fair value gap, I take a loss right there, then I can skip a few candles right there, and I can take a next trade. I have just, in 5 seconds, I have just skipped, what is that, a month worth of candles? That's insane. So for your patience, this is not great at all. Next to that, when it comes to trading, you're thinking a lot about what you are going to do. Meaning in backtesting, you don't think a lot. It's just brainless. It's almost like TikTok swiping, you could argue. It's just brainless activity. You're not necessarily doing anything. So because of that, in live conditions, for example, currently we discussed this daily fair value gap right there. If that's interesting, yesterday in MMT on Saturday, then I slept a few hours. Then afterwards, right now, I'm here on live stream. I'm seeing that daily fair value gap again. I'm thinking about it again. Then next to that, I go sleep again. Before the market opens, I've already had 48 hours to understand right there if that's high probability or not. In backtesting, I just have a split second in understanding if this is going to be a good trade or a bad trade. So some people might say, oh, you don't do backtesting because you can't do it, etc., etc. It's just genuinely, I'm trying to tell you, it's not beneficial. And from what I've seen also, a lot of people, they start using certain tools for backtesting, and they gather data before they go into live trading. And then that data does not match their expectations that they had. So for example, in backtesting, they might have a 70% win rate, 1 to 2 RR, etc. And then they go to live trading, and all of a sudden it's completely different. Well, of course it's different because it's a completely different environment. So you're not setting yourself up for success. So what happens is they take a loss in live. They think, I haven't backtested enough, so I need to go back to backtesting. No. The sooner you jump in the water, the faster you will learn to swim, even though you might need to all of a sudden drown before you learn it. But that's learning, because you learn from pain. You learn when something is on the line. As much as it's, of course, we try to avoid it. The same with demo trading. You don't necessarily learn a whole lot if you don't take it serious, because that pain when something is on the line, and even if it's a small challenge, for the trading plan module, we have a trading plan module currently in the MMT that's going on for the masterclass. I have, in the past few months, dedicated myself to create a complete new trading plan for flow traders. And what I did right there is I bought a small challenge. And of course, you don't have to buy a 100K challenge. It can be the smallest amount that you can afford. It doesn't have to be a crazy amount. And I bought the smallest challenge. And I execute on that challenge because something is on the line. And so far, I've learned from those mistakes because there's pain involved, because I don't like losing. So I learn from it, and currently I'm in profit for that trading plan. So currently that trading plan is profitable because I'm learning from it. I cut and I do what I preach always. So I buy a small challenge. The same, you just heard me say at the beginning of 2024, when I developed my stick trading plan, I tested it on a live, quote unquote live. There was something on the line, an FTMO challenge, and I passed it because there was something on the line. So that allows me to improve a lot better instead of demo trading or backtesting and then saying, well, Now I'm going to try to live trade. No, there needs to be pain on the line. Very important. That's a little rant. But that's essentially what it comes down to, in my opinion. And that's why I think replay backtesting, it genuinely, I'm not saying it for any other reason. It's just generally just better, if that makes sense. It cuts the time where you are going to become profitable. It cuts it in half, if that makes sense. Exactly, Shivan. Yeah. But that's what it all comes down to in trading in general. When you're first starting to trade, you are going to make a lot of mistakes. And then slowly over time, you want to filter out those mistakes. And but what happens most of the time is that people don't stick to the same thing. So the mistakes that they filter out for one trading plan, then they move on to a complete new trading plan. They need to start back at zero. So that's the problem. What happens a lot of time, if that makes sense. So the first thing is find what resonates with you. Stick to it. Stick to it. And that can be fair value gaps, can be, I don't like to say it, can be inverse fair value gaps, whatever it may be. If it resonates with you, that's the goal. That's what we want to find. Would it be possible to check one cross pair? So for me right now, yeah, for sure, of course. But for you in trading, I wouldn't necessarily recommend it. You leaked your IP. Well, it was not my IP actually. It's just for your information as well. It was not my IP, but that's all right. I think that's all right. It's someone who I work with, so. Hopefully that makes sense. It's usually in trading. It's a lot of the basics. I do everything from a very logical standpoint, if that makes sense. At least for me, logical. Might not be very logical for a lot of people out there, and that's perfectly fine. But for myself, it's very, very logical. Very logical. Thank you, AT Trade. Thank you. I have a question. You don't recommend us to look at crosses? Yeah, you can look at crosses, but you need to understand if you are going to trade one singular pair or instrument, then the crosses are not where you want to be right there. Crosses can be good, but crosses in general are lower volatility, meaning that they struggle a lot more in price action. Where, for example, if you want to focus on one instrument, you should really focus on the indices, in my opinion, because they are consistently volatile over years. Where even Forex and the majors right there are not consistently volatile as the indices right there. And the crosses right there are even lower volatility right there. So for higher time frame trading, that's perfectly fine because a consolidation, that doesn't really matter on the lower time frame. But if we get into a lower time frame stuff, then you should really pick consistently volatile instruments. And this is also why I personally don't really recommend trading crypto if you really want to take trading seriously. And in general, might be very controversial what I'm about to say. Well, not necessarily only to the crypto dudes. Crypto is great and it's very fun to trade. It can be extremely volatile, but it's not consistently volatile. And what I mean by that is with crypto, you're going to have crazy down movements one day, crazy up movements one day. Then for the next 2 weeks, you're just going to have consolidations. It's not ideal trading conditions. For investing in a meme coin, that's perfect. That's quite fun if you want to do that. But for trading, crypto is not the way to go. If that makes sense. Maybe not for you, Deepak, but for for a lot of people, it does work. So if the theory does not work for you, then that's perfectly fine. And it might not resonate with you, but for a lot of people, we are getting consistent payouts in the MMT. We are getting consistent people that are getting funded, even from the live YouTube, from completely free education. So saying something does not work, that's just completely a load of nonsense, because there's so much proof that it does work. So it does not work for you, maybe. And it might be a coping mechanism to say, well, it does not work for everyone. It doesn't work for anyone. I'm sorry, my friend. Maybe it just doesn't work for you. It might not work for anyone and for everyone. That's perfectly fine. That's perfectly fine. It's yeah, Ante, it's if you study them, but also if you know how to use them. I think that's very important. We had someone come into the MMT, and again, that's quite funny. We had someone come into the MMT, the public Discord, I believe, and he was trying to prove us wrong as to why it doesn't work. And he said, well, look at this fair value gap. This fair value gap didn't hold. That's why I think fair value gaps don't work. That's a very weird way of saying, because then you're already assuming that something works 100% of the time. So that already tells me that you simply don't have the knowledge to even understand trading at a basic form. That nothing works at 100% of the time. You need to find the highest probability conditions where it does work. That's what trading is about. So it's it's very funny. But again, everyone is entitled to their own opinion. Again, for me, I don't really want to go into the discussion in that. I don't really care because we see a lot of people where it does work. So that's perfectly fine. I see a lot of nifty 50. All right, let me satisfy everyone here. Let's go over nifty 50. Please tell me which one is the NSE one. Is it that one? Which one is it? Which one is it? Is it NSE or what? NSE. Okay. Okay. All right. Let's see. Let's see what we have. Let's break it down. It's been quite a while, to be honest, when I did nifty 50. But let's see what we have. We have this swing low right here. We also have this swing low right here. Look at the monthly time frame currently. We have this fair value gap, bearish monthly fair value gap right here. Let's see. On the weekly, we are respecting this fair value gap right there, pushing price lower. Then we have, I like to think of those gaps as just fair value gaps right there. So this for me is a tiny fair value gap that we have right there. If I turn on no gaps candles, for example, you'll see right there, it turns into tiny fair value gap as well. Now that to me, what we're currently looking at is that we are not respecting that fair value gap anymore. So we're taking out the rejection high. So I would argue just from this standpoint, short term, we might be looking at longs right here. But confirm that by creating new fair value gaps at this moment in time. So for example, what we're seeing is on the, let's see, on the 4 hour, we are currently retracing back into this fair value gap, into the fair value area as well that we have right there. Ideally, we confirm if we do want to continue higher with a new fair value gap right there. And then if that happens, we actually have quite clear targets in the form of those highs right there. It seems like the bearish side at this moment in time is struggling a little bit. It's very similar to Bank Nifty. So for me, I would like to wait right here, see what we can do. If we can create those new fair value gaps to continue higher, we might be looking at either new all-time highs or targeting those highs as well. It's important. Yes, Mark, that's a good observation. Arguably, yes. Somewhat, yes. Yes. Yeah. Ping pong effect. Ping pong effect is essentially, it's quite straightforward. So we need to understand in the market that we are always moving from PD race. And what I mean by that is that we are always, if we are going higher or lower, then it's a PD ray that's going to be responsible for pushing price higher right there. So we are moving from PD rays, rejecting from PD rays. And we're also moving towards PD rays, meaning that a target in price action is always going to be a PD ray as well. For example, that swing high. So we have swing points, which is a liquidity. We have fair value gaps and we have fair value areas. Those are the three groups, you could argue, of PD rays. And we're always moving towards and from them right there. So what you'll notice is, for example, why did we create this retracement? Because we came into this fair value area. That's why we created a retracement right here back into this fair value area to then potentially continue higher. The next retracement, we might get it when we reach this swing high to then continue higher. So what is happening? It's a ping pong effect where constantly it's well, if you've ever seen ping pong, if you've ever played ping pong in your life, then you know it's a constant back and forth right there. So this is also what's happening right here. We have, and even we can track this back very far, right? We create this swing high, come into this fair value gap right there, So we are moving towards this swing high, moving from this fair value gap to continue higher, moving then towards this fair value area. That caused the retracement back into the fair value gap to continue higher. This is that ping pong effect right there, where retracements and pushes higher are caused due to PD raise. If that makes sense. Spring Roll 2025, is it for beginners to advanced? Please respond. 2025 or 2024 Spring Enrollment? 2025 is well, we touched on a lot of things that are already being touched on. Not, I wouldn't say complete beginner. No, not necessarily complete beginner. How's Derek doing? I hope he's doing great. I hope he's doing great. Alright, please, how do I know when a trend has come to an end? How do I know when a new trend is in play? A lot of things, and bijvoorbeeld, I wanted to say, for example, in English, I wanted to say a lot of things come down to logic and what I've already mentioned in the past as well. And it's not to say you need to go back to old videos. No. I'm going to build onto that logic to get you an understanding of next concepts that come afterwards as well, to understand where we are coming from. So let's first understand at the basic core, what is a trend? A trend is when a bullish trend, for example, is when discount arrays hold and premium arrays are being disrespected. So discount arrays are being respected, premium arrays are being disrespected. Like we see, for example, here. These discount arrays are getting respected. What is respected then again? That's two candle rejection. So we keep on respecting those discount arrays and we disrespect those premium arrays consistently. So that tells us the trend at that moment in time is bullish. So how can we identify then if there's a reversal in a trend? Well, if the opposite happens. So let's say right here, a reversal in the trend is when we then start to disrespect discount arrays and respect premium arrays. That's when we have a reversal. And the higher time frame that happens on, the better. So for example, right here, what we are looking at is we are looking at this swing low. We also have this swing low right here. How can we spot this reversal from an objective standpoint? Again, a lot of things we do is quite objective, to be honest. So here we have this fair value gap that at that moment in time has been respected. Then as soon as we reach this low, we now respect this low as well. 50-50 areas, we know it as well, right? And afterwards, what happens is that we start to take out this high right there. We start to disrespect this premium rate. Can we now assume that we are bullish? Not necessarily. Why? Because we have disrespected the premium rate, yes, but we have not respected a discount array. So if you go, for example, into the daily, let's see, and we start to now see right here, we are respecting those discount arrays. That's where the trend changes. The same when we disrespect this fair value gap right there to be potentially bearish. That's not how a trend works, because that's just a disrespect of one discount array. But if we go into the weekly right there, we are still respecting these bullish discount arrays right there. So the trend never changed, if that makes sense. So that's essentially how it works. That's essentially it, if that makes sense. 100% win rate? No. No, never. For short term, of course, Bashir, yeah, that could definitely be possible. Short term, for example, in a week terms, or in a week, or let's say even 5 trades. If you take 5 trades, it can be 100%. Yeah. The long term, if we talk about a sample size of 100 trades, if we talk about sample size of even bigger than that, 100%, no. It's perfect, Bashir. It's perfect. Keep the focus. Keep the focus, I would say. Keep the focus. For sure, Milan. For sure. Breakaway gap is... It's always an interesting topic to go over. And I notice it tends to confuse quite a lot of people as well when I do create a video on it. Because it's quite a... It's very nuanced, breakaway gaps. So for example, in the past, I mentioned right there that you should really pay attention to the third candle and if it closes above the second candle high, for example, like we have right here. If that's the case, then this should be a breakaway gap right there. But that's a very beginner friendly way of understanding it. And a lot of people picked up on that, even other huge videos were created around that. And I felt the need to step in somewhat because that's not necessarily true. It's a very beginner friendly way, yes, but a breakaway gap is understanding the target in correlation to the fair value gap. So are we at that moment in time more likely to create a retracement or more likely to first reach the target to then create a retracement? So when we do create a retracement, there always needs to be a certain reason for retracement, which is when we do reach a target. For example, this retracement is not illogical because there's a reason to create a retracement in the first place right now. Now, if we take a look, let's see if we can find a few examples. Let's see what we have. Even if we actually look at gold and we go back a little bit right here, then this, for example, is also a breakaway gap at that moment in time. Why does this become a breakaway gap? Because we first reached this low. So if we do retrace back into this fair value gap, which is not illogical, we can continue lower from it. Perfectly fine. But as soon as this expansion phase candle happens right here, now this is a breakaway gap. And that's reacting. Why? Because at that moment in time, the retracement to come back into this fair value gap is now illogical because we are more likely to first reach this low right here to then continue lower. The same way right there that we use this low right there to create a retracement back into this fair value gap. So this retracement is not illogical right there. And that's essentially how it works, breakaway gaps. It's a constant evaluation of understanding if we are more likely to reach the target first or retrace back into the fair value gap. And which one is more logical? That's important to understand. Because we can have the retracement, but if the retracement happens and it's not logical, then we're more likely to see opposite prices as well. If that makes sense. Let's see. It's perfect, Bashir. It's I'm not saying it's not true. I can see it being true. I just think overall, a longer term, you are going to have a loss sooner or later. But that's perfectly fine, of course. I mean, then it's not a bad thing. Let me put it that way. Wicking is arguably the same thing as a two-candle rejection. Now, from a strength or weakness standpoint, we could always argue that if the first candle rejects and wicks a fair value gap, that's stronger than a second candle. Why? Because it takes another candle to continue higher, which means it's simply weaker, if that makes sense. So here, for example, since it takes another candle to push higher, we can argue it's weaker right there. If it only takes one candle, like we see right here, it's stronger because it only takes one candle. That's just simple logic, if that makes sense. But arguably wicking and two-candle rejections, arguably the same thing. New Zealand dollar CHF, let's see. There it is. On the bear list, you said. I don't like the monthly. It's really struggling to push lower right there. The weekly is not necessarily that bad, but we don't reach that high. I'm not too convinced on New Zealand dollar CHF personally. I don't like it. It's quite 50-50 here to me. Quite 50-50. If we do respect this fair value gap, create a new bearish fair value gap, then it could be interesting to look for shorts, potentially. I'm not sure what that is, James. CISD. I'm not too sure. I'm not really up to date with all the trends in trading industry, etc. Which concepts are doing really well, etc. Which concepts are currently popular. I'm not up to date with that. Only on my own concepts. No, Antoine. It depends. It depends if you're trading 50 minutes, for example, then yes, Antoine. But otherwise, no, not really. Change in state of delivery. Okay. I'm not too sure. It doesn't really change anything, but I'm not too sure. I'm not too sure what it is exactly. You could silver bullet on a 4-hour time frame. You could, for sure. Don't see why not. Well, that depends. So the question is, does the news really make an impact upon market when it's trend? I mean, could it reverse? It could, but usually what does tend to happen is news from a fundamental standpoint is already somewhat priced in. So news is more so about what people expect to happen. And then when the news release actually happens, it doesn't necessarily change anything because people already expected it to happen. But from a standpoint of volatility and from technical analysis, it could potentially happen. Yeah, for sure. For sure, but it really depends. And the reason why I say usually it's already priced in as well, or not the reason why, but what you'll notice, for example, FOMC, NFP, CPI, and it does not give you a reason to trade it, because don't trade it. It's very important to understand. But usually what you'll tend to notice is that news events usually follow through on what the higher time frame or what the technical analysis already was suggesting. Just speeds up the process essentially. Let's see. There's a free public Discord in the description, Archie. And you also have the MMT Discord, which is exclusive. And a new playlist coming soon. Yes, we will have a new playlist in 2025, but I'm not sure if it will be soon. I'm not too sure. But to overcome fear of taking live trades previously liquidated and heavy losses. Well, why did you take heavy losses? That's my first question, will be my first question. And that's probably because the risk management or you were overtrading, etc., which usually goes hand in hand with each other. So have a risk management plan regarding that. And then, yeah, as much as it comes down to it, executing that risk management plan, seeing over time that is what saves you essentially, and that is what can lead to make you profitable as well. And then slowly that will fade away, the fear of taking live trades. I think everyone is fearful to a certain degree taking live trades, and someone who's new to it might be more fearful. But I would start off, first of all, have a clear risk management plan. So just understanding you're not going to blow an account all of a sudden if you stick to that. Having that understanding, that helps a lot. But then just arguably doing it, and it's a little bit of a silly advice, but that is what it comes down to. Hello, Kenya Kid. Great to see you. Ari, thanks to you, January was my best month so far in trading. Love to see that. Love to see that. Love to see it, my friend. Explain quarterly shift, please. For sure, John. Or fractal quarterly shift. So quarterly shift, a lot of it, what comes down to it, in my opinion, is fair value gaps. And what I mean by that is, if you think of it in a logical standpoint, what is a quarterly shift? It mentioned that every quarter we could potentially have a shift in price action, so we could either continue lower or shift higher. Essentially, that's a quarterly shift. Now, if you think logically, then what happens every 3 months, so every quarter, is that a potential fair value gap is created. So when we, for example, here we have candle 1 right there, candle 2, and candle 3 right there, what happens is we create a fair value gap. So even if we are going to trace back into it, we have a short-term quarterly shift right there. So this can apply to the 1 hour, this can apply to the 4 hour, where every 3 candles, because every 3 candles, what is every 3 candles? It's a fair value gap. So here you have a short-term quarterly shift where we can retrace back into it. Short-term quarterly shift, short-term quarterly shift, etc., etc. Just because, not because there's some magic, but because there's a fair value gap. That's about it. Which price needs to efficiently deliver back into. Hello, Rainison. How are you doing, sir? Great to see you here. How to manage fear of being wrong. Yeah. I'm not necessarily a psychology expert. We for in MMT for example, we have someone that is more an expert in psychology that has lots of experience as well. But how do I manage my fear of being wrong is mainly understand probabilities. So what I remind myself of, and the reason why I even get into the trade, is understanding that the probabilities are in my favor. I could still be wrong, but I'm personally not necessarily that worried about it when I keep reminding myself of the probabilities are in my favor. And over the long term, if the probabilities are in my favor, then the odds of being profitable are literally in my favor, if that makes sense. So that's what it comes down to a lot of times for me. Yeah, Hassan, yeah. I don't use weekly profiles. It's quite funny actually that you say that, because there was it's quite funny that you say that, because weekly profiles, in my opinion, they play out based on PD race. So whatever if you understand PD race, you understand weekly profiles, and you don't need to pay attention to it. So we had someone, and I'm sorry to call you out if it's you or someone else, but we had someone that was naming a weekly profile because they saw the profile, and I imagine, because I used to be like that as well, is I imagine they saw that weekly profile and they were convinced it should play out that way. And they mentioned it was a Wednesday, week of the high right there, profile to continue lower, and that this was the move lower right there. And that's when I mentioned at that time, I think this is manipulation to overall continue higher right there. And I do think Monday can be the week of the low right there, because that's what swept the previous week low. So, and that's what happened. That's not saying I'm 100% right all the time. No, but that's saying that the weekly profiles, you shouldn't be too fixated on it, because it's going to happen either way. And the way it happens is it's PD race. So a week's low gets created at PD race. In this case, it's the previous week low. A week's high also gets created at PD race, which in this case is this swing high right there that we have, which is the daily swing high as well. So it's that bounce between PD race. That's where a weekly profile develops. And you can try to say, out of the 10 weekly profiles, you can try to say, well, I think this week might be a Thursday profile reversal, blah, 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 blah. It doesn't really matter, because it's going to play out anyway. So you don't really need it. It's incorporated into the trading plan without paying attention to it, if that makes sense. Low resistance liquidity run is also an interesting topic. It essentially comes down to, again, a lot of it logical understanding of what the concepts mean. So low resistance liquidity run. Low resistance. What is low resistance? It's opposing PD rays. So if we are bullish, what are our opposing PD rays? Those are the bearish PD rays. So that is, for example, this premium rate, that bearish right there. So low resistance, says it in the name already, is when there is no resistance, essentially. And all we have is a low resistance liquidity run. So all we have is those swing highs to take out right there. It's how we can sort of dissect it. All right. Thank you, everyone, for being here. I am going to end it here. Thank you, everyone, for being here. I really appreciate it as well. Have a great rest of your Sunday, or if it's already night for you as well, have a great Monday. Sleep well. Thank you, everyone, for being here again. And I'll see everyone around in the Discord. I'll see everyone next week as well. And always Sunday, 11 a.m. New York local time. I'm here with a live stream. So feel free to ask me anything as well. All right, perfect. Thank you, everyone. Thank you.